Hi everyone. Today let's talk about global stocks potentially beating US stocks through 2035. And of course, we'll get into all of the usual data and charts as we prepare for the next week of trading. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So top hedge funds see global stocks beating US stocks through 2035, and this is off of the back of a massive 80% outperformance of US stocks since 1990. We've had the Mag 7, which has led markets higher in a magnificent fashion, if you will. Absolutely massive for sure. And that's what they point to here. You got the dot-com bubble, dot-com crash, which obviously was not super great, but it eventually led to stocks going much higher. You can see 3.8% outperformance per year, absolutely a lot. And then 1.1% real earnings growth in the United States, faster than the global markets. So what is the problem that's going to happen now? The problem is US outperformance is now sky high. Prices are also sky high, and the stocks around the world are just relatively cheap. There's just not great places to be, and they're not being given the same valuations that they had. So you got things like price to earnings ratio, CAPE ratio, which was less than half of the international markets, which gave US shares plenty of room to run. So when we were undervalued, people were not getting into US stocks, and you can see it here. Real earnings growth was very strong. The value here of US stocks was low, and now that has kind of flipped, in my opinion. We've talked about that before, where US stocks are just very expensive. It's not a great place to be. Similar to what we saw in Japan in the 1980s. Got very expensive. The growth just did not continue, and of course that story ended up not playing out very well for the investor. Is that something that we're going to see here over the next 10 years? I think that's absolutely a possibility. Is a lost decade on the horizon. Again, certainly a possibility. Relative valuations cannot stay this extreme for forever. And this is part of what we talk about on charts like the SPX divided by the M2 money supply. We are currently in bubble territory. Are we going to be in bubble territory forever? Of course not. Otherwise, it would not be a bubble. And that is right where we are right now. Exposure to US stocks is at a record high historically. And you can see that here, relative CAPE ratio for US versus non-US. It's just super high. Exposure to US is very high. Exposure to US equities is very high. And in order to keep this at this level, they say US earnings needs to outperform by 2.2 percentage points per year, more than double the historical average, and far above the 0.3% growth that we're seeing as the most likely case over that time. So why should we care? Of course, we need to talk about valuations, correlation. You can see at current levels over the next 10 years, not super good. We're in this kind of zone again, tends to be not super good. So again, find better places to be, find yields, wait for better opportunities. And you could always look for things like the Easy Rider portfolio or the Momentum Rider portfolio. We've talked about that on this channel before. I really like the Sector Momentum portfolio or the Momentum Rider portfolio. Check out the last Saturday's video if you're interested in those portfolios. Looking at fear and greed, we finished the week at a 71, up from a 62. We still have extreme fear on momentum, which is very surprising, but every other metric is either in greed or at least neutral. Volatility is at neutral, but not super common to see that one in greed, but every other metric in greed or extreme greed, just that momentum. So is this getting close to a turning point? I would say the contrarian metric is getting very close to that 75 overall level as well. Moving over to the AAII survey, look at this big swing we got, 35.9 on the bull side, neutral, basically unchanged, and the bears getting squeezed a little bit. Definitely some bulls coming in over the last 2 weeks, which again, as a contrarian metric, tells me there is some room for us to fall, bulls ready to buy. As we go lower, bears ready to ride it to the downside. So just keep this in mind. We couldn't go any lower when there was too many bears in the market, but now there are some bulls, which again tells me that I think markets can fall at least a little bit. Moving over to seasonality, still very bullish here into the end of the month. We'll see if this continues to follow through. We're right here at the 16th. This was supposed to be a relatively peaky level. If we get that post-election rally, this is supposed to carry through up until the 21st, 22nd time frame. And then the end of the month is kind of flat unless we get that more normal year. So we'll see. Right now, relatively bullish. We'll see if we get that follow through next week. Moving over to the economic calendar, you can see Monday, bearish leading indicator, semiconductor billings coming out. You can see Dow up 13, down 8, not a super great metric there. S&P's, however, pretty good week for them. NASDAQ also pretty good, up 14, down 7. ranked number 4 there. And then you have the Friday ahead of Memorial Day, up 13, down 12, a little bit of a negative average there going into the Friday. So keep that in mind. And then Monday is closed. We do have Tuesday up 23 of the last 39. Pretty good metric overall there. Not a ton of data for this week either. Moving over to the economic calendar for Monday, you got CPI for the Eurozone, not a whole lot there. Basically nothing for the Tuesday. Got a little bit of data on Wednesday, but nothing big. 20-year bond auction, interesting. Crude inventories, fairly interesting. Thursday, we have continuing jobless claims, a little bit of soft data here with global composite PMI, manufacturing PMI, services PMI, existing home sales also coming out at 10 o'clock. 10-year tips, this is way down at that 2% level. That is where inflation is expected to be at this point. And then for the Friday, you have new home sales, and that's pretty much it. Low data week across the board, nothing hugely impactful. Moving over to the charts here, starting off with the S&Ps, you can see we are right back into this zone. Are we going to double top? Are we going to get a lower high? We did get above the trend line here on the SPX. You can see momentum basically zero as we continue to swing to the bull side. Momentum still super bullish. Let's go ahead and extend out the trend here. If we do get a push to that next trend, that would take you around 6,081 points. That would take you very, very close to that all-time high. Just off of those highs, are we going to throw a wick to that level and then we're going to reject potentially? Let's go ahead and extend this one out just in case we do get a major breakthrough. If we do, that would take you to this trend here, around the 6,500 area. Do I think we're going there? Probably not. Is it a possibility? Always. And then looking at it here on the daily chart, we're above all the EMAs and SMAs. We're right at the low of this consolidation area, this kind of turning point, pivot point area. And then looking at the levels right now, I have 597.63. That is kind of this consolidation low that we've been talking about. That would be the next level. If we did push through there, I got 604.50, kind of the midpoint before we get to that all-time high around the 610 area. We are already overbought on the daily chart, so something else to keep in mind there. And then you have a lot of these longer term structures. We're above almost all of those, but that next target is right at the all-time high here, this midpoint through this structure here. So just keep that in mind. That trend line sitting up around that 610 area. Over the next couple days, as this extends out, it'll be closer to 615, which would be an all-time high if we got there. Moving over to the Tasty charts, you can see that trailing stop. This is what we've been watching very, very closely here. That is at 494.85. We didn't get above it this week. We're still in bearish conditions. Is this the turning point for markets? We did see a little bit of a rejection on the Friday after hours on that Moody's news. Is this the pivot point? Continuing to watch it very closely. If we reject from here, especially after the gap up and rally, that's going to be a major turning point in my opinion. And then we could see this kind of sideways choppy, potentially consolidation, meaning that we're hitting the highs, selling, hitting the lows, selling. Do we wedge up here? That would be interesting. Then you're buying anything kind of below this midpoint area around 55, 54.10, somewhere in there. So buy the lows and sell the highs until we get a triangle type pattern. That would be interesting, but we don't know for sure. Right now, I think this is going to be a zone of rejection and resistance. And then looking at that daily chart, you can see we're just super extended, way above all the upper ATR bands, super extended. Trailing stop, 564.88. Are we going to hold that? Are we going to retest? We did get a nice little spike on momentum on the last candle of the week, but for me, not a great time to be buying. If you're already in it, I could see why you might still be holding. I'm still holding some Qs in here, but certainly wouldn't be chasing at this level. Moving over to the NASDAQ, really, really strong week, pushed through this trend here, gapped through it and rallied. The next trend resistance is all the way up at 22,192, which is right at the all-time highs. Are we going to get a tap of that level? Momentum still super bullish. RSI still super bullish. Waiting to see what happens at this trend line, if that's where we're going to reject. There are some indicators that say we might not make it there, but structurally at this point, it seems like we're going to get at least a double top, and then we'll see what happens. Do we get that clean breakthrough or not? And then looking at it on the daily, a little bit tighter for a trend structure in here around 21,812, so just ahead of those all-time highs on the daily. You can also see a lot of volume coming through at this level, highly traded zone, super overbought, momentum starting to fade. Like I said, there are other indicators that say we might not get there in the short term. And then looking at that Qs chart, you can see the level I have 523.24 as that midpoint of this consolidation. The high obviously being that 538.28 area right in that all-time high before we saw this bigger sell here. So watching 523 and then 538. If we reject, your support is still down at 509. Moving over to the Tasty charts here for the Qs, you can see the Qs actually did get through that trailing stop, so we're back into bullish conditions here. That was at 517.76. We did get above that level, and right now the trailing stop has moved back down to 417.89 because we're back into bullish conditions, which means are we going to push through here? Certainly a possibility. That upper band would be the next target if we did get through the all-time high, and that's all the way up at 577. So something to keep in mind. Do we have another 10% of rally in us? Again, I don't really agree, but that is what you would have to be looking for if you're on the bullish side of this trade. And then looking at the daily chart, of course, we're still super extended. You have that 8 EMA almost touching the upper ATR band. That is not typically a time to be buying. You don't usually get there and stay there for very long. You can see even to the downside when this was selling super aggressive, that 8 EMA almost got there, and then we did get a pretty substantial pullback before re-accelerating back down. Do I think this is going to be a change in structure? Not necessarily. Do I think we're going to get some kind of a pullback? Absolutely. Moving over to the Russell did get to that 21 EMA, up about 4.5% on the week. Really strong, continues to be really. We've had 6 weeks of bullishness in a row. Momentum continues to swing. RSI getting above the 50 line. Everything says relatively bullish here in the short term. Can we get to that 55 EMA? That would be your next target, around 213.87. Your support is still 208. Your resistance is still 211. We've been in this trading range for a couple of days now. Are we going to get the cross into bullish conditions? That would be a pretty bullish indicator. And then looking at it here on the daily, you can see that same level, 208. We did dip below it midweek, got back above it to finish out the week. We're above this structure here, which is good. And now we are looking for that 211 area, and then you can see the 200s all the way up there at 216. That would be your next kind of zone of resistance, around 214 to 216. Moving over to the Dow had a good week as well, 3.5%, pushed right through this trend line here, pushed through the 21. We're right to that next level, 426.20. We did close above it, so 432 would be your next resistance. That is the midpoint of this consolidation. If it pushes through there, then you're watching for the all-time high, close to that 445.16 area. The actual high is a little bit higher than there, around 448, but just something to keep in mind. Momentum and RSI continue to look really good here on the weekly chart, but of course on the daily, same structure. And you can see that here, hitting some key zones of resistance, hitting this high back from March. Is that going to be a key pivot point? That was where we turned last time. We did get above all the EMAs and SMAs, momentum, step down for a little, step up, step down, one pop. Not quite overbought yet, but looks okay. Moving over to the ratios here, we did get a little bit of outperformance from the SPY versus the Russell, so that's good. Momentum continues to fade here. RSI, however, says we should reject off here and go a little bit lower, meaning a little bit of Russell outperformance. We'll see. And then you got the NASDAQ hitting this key trend resistance and then pulling back from there fairly substantially. So is the NASDAQ set to underperform a little bit next week? I think that is a big possibility, something to keep a lookout for next week. Do we pull back to 355? And if the NASDAQ is not leading us higher, we're probably going to see at least a little bit of a pullback. So something to keep in mind. We're at the top of this consolidation range, and I think this is probably going to sell in the next week or two. Moving over to the SPX divided by the M2 money supply, we did get above this level. This was the zone where I thought we might see a little bit of rejection. We did push through there, and then we did hit overbought conditions. Again, the next level here is 27.25. That's in this consolidation range here. We're right at the low of it, which would give you just a little bit more push here on the daily chart. And then looking at it on the weekly, we're back above all the levels here on the weekly. Again, 27.25, you can see right here, very interesting level, waiting to see what happens with that interaction. Momentum and RSI still bullish. Moving over to Apple and Microsoft. Apple at that critical level to 11.55. This looks a little bit better on the weekly chart. On the daily, it looks like a double top right here. So not super fond of this structure. Momentum slightly bullish, RSI slightly bullish there on the weekly. Again, it looks better on the weekly. On the daily, it looks not as great. Could not close above 211. We got very close here. We've touched it a couple of times over the last 3 weeks, 4 weeks really, and now we're going to see, can we get to 217 or not? Again, structurally, I don't love it. And then looking at Microsoft, this has been an absolute rocket ship over the last 4 weeks. Really strong here off of its earnings, or we're looking at the all-time high as your next resistance. That's going to be 466.57. Can we get there? At this point, it seems like it's in play. We're right at the highs from here, beginning of December timeframe. Can we throw a wick to that level? And then what happens? Do we reject from there, or do we push to an all-time high here on Microsoft? I think that remains to be seen. Moving over to Tesla and NVIDIA, again, straight rocket ships. Both of these over the last several weeks, you had a consolidation range here for a long time on Tesla. Huge week, up almost 18%, 17% there. On the week, 355 is your next structure. Got major trend resistance in there. If it gets through this area, then you're looking for this most recent high, at least 414. Can it get back into this kind of 450 area? That would be interesting. That would take you back to the highs here. Overall, though, still looks super bullish. Momentum bullish, RSI bullish, not overbought yet. And then looking at NVIDIA, this looks more like a long-term consolidation. You got a peak here, left shoulder, head, right shoulder potentially. That would be interesting on NVIDIA. Do we hang out here, kind of roll to the downside over the next couple weeks? Then you got a clean neckline. Waiting to see what happens there. But either way, in the short term, this still looks bullish. I think 140.76 is in play. Can we get to the all-time high and break this head and shoulders pattern? We'll see. Right now, momentum bullish, RSI still bullish. Looking at Amazon and Alphabet, you can see Amazon had a good week, still up 6.5% or so, but we hit that key level 212 and then rejected from there, gapped up, hit the touch, got a rejection. Current support 255 cents there. Momentum still bullish, RSI still bullish. Are we going to pull back, find support, and then rally? Right now, I would say this is selling a little bit. Indicators still all say bullish across the board, and then you got Alphabet still doing this bear flag thing, so you got a big move down, bear flag. Couple of weeks in here, hit the high of that zone. Structurally still in the bear flag, no breakdowns yet. Moving over to staples versus discretionaries, both of these had good weeks, up 1.43 and 7.5% respectively. Obviously, staples being driven by the nice moves on Amazon and Tesla, both of them in a really bullish structure. So you got momentum here swinging to bullish, RSI continuing to be quite bullish. Momentum here on staples finding some strength, did hit some key supports, closed on the high, looking for this to push to 82.50, potentially 83.40. And then you got staples next level 219. Let's go ahead and add another level. Want to put one right here at the high of this little zone. We'll put it right at the close of that 10 February week at 210 flat as your next resistance. If you can get above 219, I think that's an interesting area, but either way, everything looks a little bit bullish here on the long time frames. Moving over to Breadth. Breadth had a really nice week, really on both of these. 20 days still in this peak area. 3 weeks now we've been in this zone. Momentum still bullish, RSI still bullish, still holding really, really strong in this area, right at that 86.50 level. Can it go a little bit higher? Not really. Will it reject immediately? Also not really. And then looking at 50-day, nice gap, retest, and rally continues to look good. Your next zone of resistance is really that 83 level. That's pretty much peak here on 50-day. Gets up into this kind of 89 to 93 area occasionally. Not super common. Usually right here to that 83 area is the kind of peak zones on 50-day. So waiting to see, can you have 1 or 2 more weeks in here for sure? But we're getting very, very close to those peak levels. Moving over to 200-day breadth, similar thesis, big gap, big rally. We're right into this mid-range now. You got the level 54.69. You also got that 200 SMA right here around 56.30. This is going to be a major zone of resistance for sure. Waiting to see what happens when we get there. I'm sure we'll touch it next week at some point. We did close right at the level. Momentum bullish, RSI bullish. Structurally, still very much a downtrend, but we're getting back into those zones of resistance once again after this big move lower. And this has been a lot of weeks in a row here. You can see this is 6 weeks in a row of bullish movement on market breadth. Is this the zone? I think we're really close, even if we're not quite there yet. Moving over to the dollar did go higher, but it threw a big wick to that 102 level. Could not get above the trend here. Momentum's holding in here. RSI very oversold. Pulling back to the SMA, are we going to get a rejection from here? Hard to say. The dollar has been very weak over the past couple of months. We're now in this kind of consolidation low range, and I just don't see this gaining any strength, at least with the Fed saying we're going to get cuts at some point this year. Not super great. Yields went a little bit higher. That helped the dollar a little bit over the last few weeks, but not anywhere near where we were. We were all the way up in the 110 area, and we've pulled back down to the 100 flat, and my guess is we'll kind of consolidate in here. I don't think we'll get too much weaker without news, but I don't think we're going to get any stronger with all the tariff drama that's going on as well. Moving over to bonds, TLT had a pretty rough week. J&K had a good one, up about 1.25% right to this 95 level. We said this was an opportunity in here around 91, and it absolutely has been. We're getting close to the 200. This might be a time to sell, especially if we get back below the 95.61 area. And then you got TLT. I still think this is a buying opportunity. Anywhere between 82 and 85 is buying. Really anywhere between 82 and 89 I think is a buy over the next couple of years. But again, just keep that timeline in mind. This is not necessarily a short-term trade. This could go lower in the short term, and structurally it does look a little bit bearish, but over the medium to long term, I would expect TLT to go higher from here. Moving over to the VIX. The VIX cratered the last 6 weeks in a row, as you would expect. Momentum bearish, RSI bearish, headed towards this trend line here, headed towards that next level. Maybe 14.7 would be interesting, but watching this trend line, this is a very interesting one. Marks a lot of tops in here, cut through here a lot of times in consolidation, but is this a zone where we find a little bit of a turn up? Something to consider there for the VIX. Right now, though, looks bearish. And then finishing up here with my accounts, you can see I was down pretty heavy on the last day of the week. Overall, for the week, I was down supposedly around $500, but of course, this is not all the way real. We talked about it in the Friday video. This is accounting for the down move in the stock price, not accounting for the price adjustment on the calls that will happen on the Monday open. So we'll get a better idea of where I'm at on the Monday. I have plenty of protection here, so realistically, I should not have lost any money. Just waiting for this to move here, and I'll be protected all the way down to $4.90 or so with that $14.50 credit. Technically $4.90.50 would be my break even to the downside, where this would go to where I would get a max profit on these calls and still be protected on the shares. So I have a lot of room to be successful. Even if we do see this stock price pull back a little bit, plenty of room, and still deep in the money at 415. So again, not super worried. Even if we do get a little bit more bullishness, good to go. If we get a little bit more bearishness, good to go. And I am neutral on markets at this point. I think we're really extended to the upside, but the momentum has been very powerful to the upside, and I don't necessarily want to step in front of that quite yet. I think that Moody's thing on Friday might pull us a little bit lower in the short term. Do we see maybe a topping pattern or pullback in time? I think that's a possibility as well. But either way, for now, I am neutral with some deep in the money covered calls. Let me know down in the comment section if you are looking overseas. What opportunities are you looking for in those overseas markets? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.